When we look at these luxury collectibles, watches, art, etc., when it comes to investing in them, what should people keep in mind?
Look, I think the market context matters, and I do think that ultimately we see it's a global market. It is resilient, and ultimately people are chasing the best of the best, and we've seen that play out. In the first 6 months of this year, with a couple of examples. Our New York jewelry sales, for example, were led by two exceptional stones: the Estrella de Fura ruby, which sold for $35 million, and also the exceptional pink diamond, the Eternal Pink, which sold for $35 million also. That was our highest ever total luxury week in New York. So what we're seeing is that at the very top end of the market, collectors are chasing rarity, quality, provenance, obviously the story of the item, and then ultimately how fresh to market is it. And if all of those ingredients come together, then we are seeing actually robust demand from a global audience at the top end.
And Josh, I'm curious about this younger generation of new collectors that have just come into this market during COVID. We saw a similar phenomena with retail investors in the stock market. How are those buyers different from the sort of baby boomer, more traditional customer of Sotheby's?
I think there's a couple of things that are driving it. First of all, the digital portion of our business and the way that clients engage has fundamentally shifted. And so obviously social media, but also then enabling transactions, whether it's through online auctions, has really broken down some of the barriers for a younger generation to engage with and get into the auction, the secondary market. So we're absolutely seeing that there's been an influx of demand from a much broader and younger audience. And we're also seeing some of the motivations have been changing. And so there's a much higher appetite for younger clients to come in and really invest in high quality pieces. And those are status symbols to a certain extent, of course, but also there's inherent value and an emotional connection to those luxury objects. So we're really seeing that our under 40 audience is growing exponentially, and as well as new clients, which are about 50% of our business in the luxury division, actually.
So, Josh, you just mentioned the secondary market. This sounds like the resale market. Looking at some data from McKinsey, they see the resale market increasing from $15 billion last year to $47 billion by 2025. What's the catalyst for that?
Again, I think it's really an interest in, there's a sustainability angle as well. There's an interest in quality and brands and pursuing storied items, whether it's Paul Newman's Daytona or an exceptional diamond, as you're showing here. There's really an appreciation and an increasing, I would say, knowledge base from collectors around the world, and that's really resonating with young and existing audiences.
And Josh, last question. When you look geographically around the world, a lot of discussion about China right now and questions over what the spending of the wealthy there will be. What do you see China and Asia? Are you seeing them as strong buyers right now, particularly in this luxury sector? And how important are they or will they be for the future?
Absolutely. Asia remains an unbelievably important market for us. We're investing not only in the new categories that we're selling in Asia, but also our physical footprint. So we opened our Shanghai office earlier this year. In next year, we are set to open our new headquarters in Hong Kong because we really deeply believe in the long-term growth potential and the continued engagement from Asian clients as well as the global audience.